Well, if your goal is to buy a home in 2023, you'll need a mortgage to make that purchase possible. However, getting a mortgage approval isn't always simple. By nature, mortgage lenders lend out huge sums of money, and so they tend to be very careful about who they approve. If you want to increase your chances of getting a mortgage in 2023, stick around because today we'll tell you how to get approved for a mortgage in 2023. If you're applying for a conventional mortgage, you'll need to prepare to put some amount of money down at closing. You're not required to put 20% down, but doing so will help you avoid private mortgage insurance, an additional expense you definitely prefer to avoid. But you might have to make a 10% down payment on your house. That's a challenging goal given the prices of homes nowadays. This means that your best course of action is to increase your savings as much as you can. The more you're able to put down on a home, the more equity you'll have from the start. Also, lenders prefer to work with applicants who can put down a sizable sum of money since it reduces their risk. Another important factor to keep in mind is income history. Lenders prefer to see evidence of a consistent income. The ideal scenario is that you've been working for at least 2 years and that your salary is stable, if not growing. This demonstrates to lenders that you're a responsible borrower who will repay their money. It could be a good idea to hold off on applying for a mortgage if you've recently changed jobs or have been out of work until you can demonstrate the income history that lenders require. Boosting your credit score is also a crucial step for mortgage approval. Your credit score tells lenders, mortgage and otherwise, how reliable you are from a borrowing standpoint. A higher score implies that you regularly pay your payments on time and effectively manage your debts, whilst a lower score implies the opposite. To be eligible for a conventional mortgage, your credit score must be at least 620. However, other lenders may require a higher score than that. Also, while a 620 might allow you to get a mortgage, it won't necessarily render you eligible for a mortgage at a competitive interest rate. Thus, if you can raise your credit score, that can make getting a mortgage a lot easier. So, your credit score is a crucial component. The higher your score, the more trustworthy and creditworthy you appear to be. Perhaps you have a credit rating that is simply exceptional. Great credit isn't enough when you need to borrow a sizable chunk of money, though. Also, you must be able to demonstrate to the lender your ability to repay the mortgage. So, the greater your income, the more probable it is that you'll be approved for a mortgage. So, how can you increase your income if your boss won't negotiate a raise? Getting a second job in addition to your primary work may be the solution. For instance, if you make an extra $1,000 per month, your income will be taken into account when determining your capacity to pay back a mortgage. It's not a given that you'll be approved for a mortgage. Taking these actions can position you to not only be approved for a mortgage, but also possibly have various lenders competing for your business. Apart from boosting income, the type of property you buy is also critical. The type of property you intend to purchase may also influence lenders. For instance, if you're seeking to buy a single-family home that will be your primary residence, you may look more attractive to lenders than someone who already has a primary home and is buying a ski condo they will rent out on Airbnb. The former may come across as being more driven to make their mortgage payments on time, and the latter, being pre-approved for a mortgage, is a smart move. Many sellers won't even consider offers from buyers without a pre-approval. Getting pre-approved is also important because you'll know exactly how much you're approved to borrow. Once you have pre-approval, you can start looking carefully for a home that suits your needs. Be prepared to act quickly when you find a house that offers the ideal balance of affordability and livability. When you've located a house you want to buy, you're prepared to fill out a mortgage application. Although the majority of applications are now completed online, there are situations when speaking with a loan officer directly or over the phone results in a more effective application process. Also, you might be able to build a stronger rapport with the loan officer in person, which can be helpful if you have any concerns or problems during the process. With that, we wind up today's video. Let us know what you think about these strategies in the comments section below. Goodbye.